Futures and options are inherently risky and not suitable for all investors. Only risk capital should be used. An investor may lose more than the original investment. Past performance is not necessarily indicative of future results.
Okay, it's May 3rd. It's almost noon. As you can see, Matt's moved. He was on 29, he's up now he's on 36, and you can tell he's still moving. Now, he put me in an option play this morning that I asked him to kind of explain his reasoning on it. And also, you remember last week, we actually puked a loser in options, which for me as a new option guy was interesting because I've always kind of been told that you have plenty of leeway in options, keep working them, blah, 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 blah. Well, Matt, as an option expert, says no, there's a point where you got to say uncle and get out. And, you know, that was the right call last week because if we were in that thing still, it'd be even worse. So, Matt, can you explain to the viewers the option play we're in?
Sure. As you can see, I'm still in the process of moving, so I apologize for the mess behind me. Anyway, as you all probably know, tomorrow we have the non-farm payrolls number, probably the single biggest economic report we get during the month. Certainly can be a market mover. Now, as always, I'm going to talk about a trade that I put on today. Just remember with options, okay, there is risk. If you're going to look at this type of trading, you should only be using risk capital, okay? If you write naked options, you can lose more in your initial investment. So make sure this is appropriate for you if you're going to do it. That being said, one of the trades I have really liked over the years is to sell bond option premium ahead of the non-farm payrolls number. And as I've discussed in a prior video, the reason I like to do that is these options tend to get premiumed up ahead of the number. And then once the cat's out of the bag, so to speak, the market tends to start draining that volatility premium, which is exactly what we want as the option writer. So September bonds currently are trading right around 142. So the trade I constructed today was selling the September 148, 151 call spread and selling the September 132, 135 put spread. Now, you want to collect a minimum of 50 ticks on this, so you're talking 750 bucks. You want to keep in mind it is a four-legged spread, so you're going to have 4 sets of commissions and fees to factor in there, okay? But it is limited risk, okay? The most you can lose on this position is 3 basis points, which in the bonds is 3,000 minus the net premium collected, okay? So your risk is capped, and all I'm really looking for here is I'm looking for bonds to continue to trade in this general range they've been in. I'm not personally expecting a huge surprise on this number tomorrow, and of course I could be wrong, but assuming the number's not too far off, the bonds are going to do whatever they're going to do, but either way they're going to start draining some of the risk premium out of these options, and for us that's money in the bank. That's exactly what we're looking for. So in terms of the trade we talked about in the past 2 weeks, the purchase of the June 142 put, I checked it a little while ago, and that put is now trading at a premium of about 59 ticks. So when I talked about cutting it last week, we were cutting it somewhere around 120, somewhere in there. So my point is that even in just the last few days going by, the market hasn't changed a whole lot, but you see that that option's lost another 20 some odd ticks just in time premium. So the reason I'm telling you this is it is important to know when to say uncle, as Jack likes to say, when to puke, get out, and just wait for the next one, because there's always another opportunity coming. So good luck.
All right, man, thank you. I'm back. Now, you're going to see a little change in these videos. As you probably have picked up, I'm more a futures guy, Matt's more an option guy. So we're going to wrap this one up for now, but I'm going to come back at some point and give you some thoughts on again, these options on futures. All right?